Hi again, Luke here with you, and in this video we're going to talk about the charts. So we'll talk about what you can see right here with price. What does this all mean? I'm going to share with you some of my knowledge from my experience in trading currencies. What we're looking at here, we're going to go through some of the topics over here. So the candlesticks, some time frames, what moves price, technical and fundamental analysis, basic technical analysis, and then price trends, support and resistance, and reversal and continuation patterns. So we'll just cover that briefly. I mean, this is a big topic, something that I took years to actually learn how to trade currencies, and it really worked for me in the end, not only to make money at the time, but also, of course, it's taken me through this path now to owning Asimi, creating Asimi, and understanding exactly how it works with the market. And so being able to analyze a chart quickly, just being able to look at it at a glance and say, okay, I can see what's happening. That is, I think, an important skill and something that maybe you'll find interesting as well. I find it very interesting. And so the purpose of this video is to go a little more in depth into what you can see with these charts so that when you arrive on an exchange, any exchange, you can see what's happening in the market on that day, what's been happening over the last week or so or more, and make a bit of an assumption or an analysis of what you think might happen next even. And so that's sort of what is exciting about it. So like I said, I'm going to share some of my knowledge about the basics of what you can see right here. So first off, I'm just going to actually close the order book and the search bar over there so we can just see this chart. So I've chosen the USDN Bitcoin USDN chart, mainly because of the price. You'll probably be more familiar with the way that it's been trending, and there's some interesting factors in this chart that I want to share with you. So first off, what are we looking at right here? Let's talk about candlesticks. So this is a candlestick chart, and each one of these lines is a candlestick, and you can see there's blue and red. Okay, they're all candlesticks. Candlesticks made up of the body and the wick. So you can see, if we zoom in a little bit, you can see the small lines that come out that look like a wick of a candle. So you have your body and your wick. Now, every candlestick is formed over a period of time. So this particular candlestick chart, if we're looking at time frames, is set over here. Day is where it's at the moment. So what that means is each candlestick has taken 24 hours to draw. So this took 24 hours, and then after that it moves to this one, starts drawing this candlestick for 24 hours. So if we come down to 1 hour, you'll see the chart looks much the same. However, what you can see now is every 1 hour it moves to a new stick. 1 hour, 1 hour, 1 hour, 1 hour. Now you can do that with any different time frame, and what's interesting is if we look at the 1 hour chart, so we can look at maybe the last period here. Okay, so that's what it looks like. And then if we come back to the day chart, that is all condensed into this one blue candle here. So that's how it's drawing. So whenever you're looking at a chart, first determine how long these candles have been growing for. Okay, so what is the time frame for the candle? So I'm going to work with the daily. The daily chart, or the larger candlesticks, so the larger time frames, are said to be a more reliable source of data. And the reason is that it's taken more data to create this chart. Okay, so to create this candlestick right now, we know it's taken all of that other data to create this one, and so what it says is that this is a more reliable source of data. So let's talk about how a candlestick is created. Each candlestick is created with an opening price, all of the activity during that time frame that's set, and then a closing price. And so a candlestick, if we zoom in a little bit again, all right, let me just zoom in a bit. So let's choose, for instance, this candlestick right here. Blue candlesticks mean that it closed higher than it opened. So there was an opening price right here. If we look over onto the right, 5789. That's when the market opened this candle. So when the candle started, that's the price it was at. It then moved up and it closed at this higher price of 6418. Now that's why it's blue, because the opening price was lower than the closing price. So it moved up and then it closed at a higher rate. If it's red, it's the opposite. So this candle opened here at 6465 and then moved down to 5817 and closed. And so that's what you're looking at when you look at these different colors. You know where the candlestick opened, because if it's blue, you know it opened at the bottom and then moved up. If it's red, you know it opened at the top and moved down, okay, in the life. Now, the wick tells us the activity during its time frame. So for instance, with this candlestick again, let's go with this one, it opened here, but you can see there's a little wick that comes down to here, this small wick here, and you can see there's a little wick that goes up there. So what that tells us is the market opened here, and sometime within that day period, because this is a one-day candle, it moved all the way up to there, it moved all the way down to here. It could have done that 10 times. It's not telling us that in this candlestick. It's just telling us the total range that it had within that time period. So it opened here. At some point it moved as low as there. At some point it moved as high as there. And it closed here. Okay, so that's what we're looking at with that buy candle. Let's come and have a look at maybe this candle, a little bit different. So this candle we know opened here, because it's a red candle, so then it moved down to here when it closed. But during its period, it moved as low as this, because we've got the wick that comes down to here. There's no wick above it, you can see, so it didn't actually move up any higher in that period. It opened here. At some point, it moved down to as far as here, and then it closed here. So now let's go and look at another more interesting example, which is this one right here. So this candlestick, you can see, has a really tall wick on it. So what that means is, we know it's blue, so we know it opened at the lower section of the candlestick. We know it closed right here, just slightly above it. But during the day, it moved all the way up here to the top of the candlestick. Okay, so a real spike in price during that day. So it opened, it came all the way up to here, it came all the way back down to here, it traveled as far as down to there during the day, and then it closed. So understanding that, hopefully now you can just look at the chart and say, okay, I know what these red and blue lines are. I can see, okay, what's happening with it, and now I can just quickly analyze. So for instance, let's look at the most recent chart. So the chart, the candlestick, sorry, the one that is drawing right now. So this is still in progress. And every time the market moves, you'll see the price move, but you'll also see the candlestick move. And so if we were to go to maybe a smaller time frame, like a 5-minute, you can see all of these little candlesticks that are being created every 5 minutes. And they're telling us the total price, okay? So you can see now a new one just started. So we had this one that drew, it opened here and closed here. Now we've got a new one, it's opened at this price, and it will start to draw its value over the next 5 minutes, and then once that's complete, it will draw a new one. So if we come back to the 24-hour again, you can see that this candlestick still in operation. It came down as far as here, it's come all the way up to here, and now it's gone a little bit above it. If you look at for some other candlesticks, maybe they don't even have a wick. You know, some of them don't have much going on at all. And you can see some of them didn't move much at all. This had a big movement during the day, but this one really didn't move much at all during the day. Okay, so hopefully that gives you, like I said, a little bit of an understanding about what is happening with the candlesticks. Now let's talk about what moves price. So it's buyers and sellers over here on the market order book, buying and selling. Okay, so as they buy and sell the price, if more people try and buy, it pushes the price up. If more people try and sell, it pushes the price down. And this will be also being matched with all buyers and sellers from around the world. They might be looking at other charts as well, and so that's a little more complex, but they might be looking for differences in prices. So what tends to happen is the exchanges tend to move together. Okay, so if there's a lot of buying activity for the day, it will move it, and if there's a lot of selling activity, it will move it down. Now, what's really going on there is the difference. Well, I shouldn't say that. Yeah. So there's two ways that you can analyze price data. We're looking at a chart, and really what we're looking at is patterns in the chart, and this is called technical analysis. So if you want to analyze, maybe predict the movements of a chart, it's called technical analysis when you're just looking at the current history, what it's done, and start to look for reasons that you think it might do something else new, and we'll talk about it in a moment. But what's really driving the price is called fundamental analysis. Now, fundamental analysis, to give you an example, if I'm just going to close this. If, for instance, here's some fundamental analysis. Let's say that the United States decides that they're going to ban Bitcoin in the United States. Okay, so this would be big news in Bitcoin. And so you might look at that and say, okay, what do I think that's going to mean for Bitcoin? So it might mean less users, it might mean less confidence, okay? And so it's probably likely to, as a fundamental, think that the price is going to go down for Bitcoin as a result. And so that fundamental analysis, people start to maybe sell their Bitcoin because they're like, oh, this isn't going to work. Everyone in the United States, for instance, would start selling their Bitcoin. And so then all of the Bitcoin might start to move in downward motion. That would be a fundamental move. Now, on the other side, let's say that the United States says, okay, we're going to move to e-currency, and next month, everyone in the United States must open a Bitcoin wallet and get Bitcoin. Okay, so that would be the opposite, where you'd have this fundamental where you're thinking, okay, this is going to drive new demand to the token. So as a result, this is going to push the price up. So that's fundamentals. And that's really what's driving the market behind the scenes. So you've got your buyers and traders there, you've got your buyers and your sellers and your traders. Everyone's looking to buy or sell or trade, but really they might just be making decisions just because, but they also might be making decisions based on the fundamentals. They might have been investing in Bitcoin, and so now there's this big news, and so they make a different decision. But what that does is it draws these candles. And so this fundamental analysis, people are in here, and this is mapping all of their actions. All of the fundamental analysis is being mapped into candlesticks right here. All of their decisions, all of the buying, all of the selling is drawing these patterns. And so what's really fascinating is that a lot of patterns seem to recur. So a certain pattern that may have drawn, months ago, if it draws again, it might do the same thing that it did months ago. Even though we don't know what the predictive fundamental will be, we can start to analyze the charts with technical analysis, and it's really, really interesting. So a technical analysis is really looking at past chart data and deciding, okay, when a certain thing happened, if I look at all of the times this instance happened, then after that happens, something else happens, and that thing happens 66% of the time. So let me give you an example. Let's look at really basic fundamental analysis of a chart. If I get a trend line here and I draw a trend line across the bottom of these 2 points, just move this up a little bit. You can see it's just touching the bottom of here and the bottom of here. So this trend line, this is called a trend line, and it's basically looking at the trend where it hits this point and then it's come back and hit this point. So it was going down a little bit, it hits this point, goes up a little bit, and then it was going down a little bit, hits this point and goes up. So you might go back through years of charts and say, okay, so every time that this happens, it hits twice in a row. On the third time, it has a X percentage of it going up again. When it hits it on the third time, 55% of the time it goes up, and 45% of the time it goes down. And you can see right here, this move that when it came down and hit, it did in fact, the next day go back up. You can see this up candle right here. And so even though that price didn't hold and ultimately it went back under, you can see how remarkable it is from hitting here and hitting here. If you had drawn this in, like magic, you've drawn your line and you're just waiting for the price to come down. It's going along, going along, going along. It comes down, hits it, you buy here, and it moves up a little bit. You sell here and you make a little bit of profit. This is basically day trading. So now maybe you're predicting that it's going to go further, but your technical analysis would give you that indication. Maybe your technical analysis says if it only hits twice, I'd never buy on the third one. I need it to bounce off the trend line again, and then on the fourth test of that trend line, then I know that 69% of the time it's going to go up. And so you build your trading strategy around that. It's really interesting. I find it really interesting. And so that's just a very, very simple indication for what's really going on. Is you've got these fundamentals, the news, and what people are doing, but for whatever reason, maybe it's because we're creatures of habit, right? Maybe it's just because it's pretty fascinating, because what is really going on is you have all of these news events, but when you're analyzing the chart, that doesn't tell you what the news was. But for some reason, it draws these patterns, these recurring patterns in the charts. It's really, yeah, I really enjoy it. And so you can do that over years and years and years, and that is something that you might want to look at. Word of caution, you end up spending hours and hours and hours a day looking at charts. I found it really interesting because it did take me to this point where I could create a Simi and understand the markets. However, I had to give it away in the end. I found that online marketing was by far, for time to income, online marketing was by far the best option for everyone. But it is quite an interesting industry. Now, if we come down, let's just draw this line so it's flat and talk about a couple of other things that you might look for. So a very, very common thing in technical analysis is called support and resistance. So a support level is when you have support in the market price. So you can see the market was falling down pretty aggressively here, and it hit this point and it stopped. So you can see this candle, it opened here, it went up a little bit maybe, it's come all the way down to here, and then it's closed right there. If I zoom in a little bit. So this close right here, you can see what price it's at. It's pretty much at about 5,000. So this is an important support level. So what the market is saying is that 5,000, typically round numbers, 10,000, 6,000, 5,000, but 5,000, 10,000, 20,000, they're really big numbers, right? And so those numbers typically have an effect on the psychology of the market. So a lot of people might say, look, I'm not selling my Bitcoin. I think Bitcoin's worth more than 5,000, okay? I don't know if it's worth more than 5,200, okay? But I know that I'm not going to sell my Bitcoin, or I'm going to buy more Bitcoin if it hits 5,000. And so the chart starts to tell us what those participants are saying. So right here, it hits this level, and then for another 1, 2, 3, 4, 5, sort of 6 days, it trades around this level and it can't go below it. Maybe it trades below it during the day, but it doesn't close below it, and it stays above that 5,000. This is called a support level. Every time the market goes to hit that level, the market pushes it back up, right? Sellers are trying to push it down past that level, but buyers keep coming in and they keep buying it up at 5,000. The opposite is called a resistance level. So when the market gets to a certain point, if I move this up here, for instance, let me just grab it. So this could be a resistance level right here. So you can see the market has come up, trending up, and it hits here, and again, it's like a ceiling on the market. It can't seem to beat it, and now it's coming down, and you might say, okay, well, this looks like it could even be a trend line coming across here. Maybe it's going to bounce and move up, or maybe it's going to hit this level again. You've seen that the market has already said that this is a sticking point, right? It doesn't seem to want to go above 6,600 here. And so it's hitting it, pushing down. Maybe it's going to come up, hit it, and then move down again. It's, and this is all part of technical analysis, and you have to make your own decision. Now, one thing about trading is that really in a lot of ways, particularly with something like Bitcoin, you might need a bias as well. So you might need to say, okay, overall, I think Bitcoin is going up, or overall, I think Bitcoin's going down. But in this small movement here, I think it's going to go up for a little bit, but overall, I think it's going to go down a lot more, or the opposite, right? Overall, yeah, I can see it's going down for today, but overall, I think it's going to go up. And so that bias can really help with your decision making as well, because you might be more inclined to sort of wait out a movement because you think overall it's going to go up. Okay, so that's my personal belief with Bitcoin, for instance. So overall, I think that the market is moving up, and so I might be more inclined to buy at certain points because I think that over the long term, that's going to be more beneficial for me. So now let's look at, so you're using those combination of two things. You're analyzing the price by just looking at the chart and the way it's drawing. You can see it's going down or up. You can draw your support and resistance levels into the charts, right? And you can make some decisions. But you're also coupling that with your fundamentals. So what do I think overall? What's going to happen in the next 3 months, 6 months, 12 months? And that can help with your decision making. On the same chart, we're looking at the lower section here, and this is volume. So the volume shows how many coins were traded in that same candlestick. So if we zoom in a little bit so we can see, for instance, in this current candlestick, you can see that there's 28 coins so far. So that's 28 Bitcoins at the start. That's what it's quoting in. So when you're on the Asimi charts, for instance, you'll see that might be tens of thousands of Asimi tokens that were traded in that same day. So the more volume, the more reliable the price movement is. So for instance, this big price movement down here, you can see that it has a bit of a volume spike as well, a little bit higher than the other days. So what that's, generally speaking, what we're looking at is that when the market makes a big move, we want it to be confirmed by a lot of traders, not just one trader. And so the more traders and the more volume, the more movement of coins or tokens, the more reliable that big move is. So if we see a big move on very small volume, so for instance, see this very small volume moment here, this is sort of an unreliable move. Maybe there's some indecision there. There's not a lot of people participating. So we wouldn't really, we wouldn't say, okay, I'm going to really use this candle, or I think that there's a lot of weight behind that move. But this one with this bit of a volume spike and a big move down is an indicator that the market on that day decided, yep, all the participants decided, yep, we've done a lot of trading and the market's moved down, and that's it. Okay, so this volume is good to also look at. You can see this very low volume area here. Maybe there's not a lot that you wouldn't really rely on that price movement a lot, but then when the volume starts picking up, it might be a more reliable source. Support and resistance, and so now let's move on to reversal and continuation patterns. So as well as sort of trend lines and support and resistance, sometimes you can look at a trend line and then say, okay, it's been going up for a while, and now there's a pattern telling me that it's time to reverse. It's going to go back down the other way. Also, there might be another pattern that says it's going to continue the same way. So for instance, looking at this chart immediately right now, one pattern that moves all the way down like this and then has a small move up like this actually is a continuation pattern in the same direction of the major move. So this pattern right here would actually indicate that Bitcoin's going to force down again for another run. Okay, this might just be in the short term, but that's what that would indicate at the moment. Now, if it was to continue to go up, and that's just one, okay, I'm not predicting the price there. What I'm saying is that is a pattern that you might look at. Now, that pattern might only be accurate 54% of the time. Okay, and that's the whole thing about trading. It's probabilities. There's no certainties. It's just the probability. And if you do it over and over and over again, you keep executing trades when you see that same pattern, and you know the probability is 60% of success, and you do it 100 times, then you end up with a profit. That's sort of the basics of day trading. So now the continuation pattern and reversal patterns, I would encourage you to maybe go and look at yourself. If you're interested in this stuff, go and look at it. And you can also leave some questions in the comments beneath this, and I can answer any questions that I have for you. But overall, hopefully this just gives you a bit of a better understanding. When you open up the charts, you understand now. You say, okay, so I can see that the price is moving up today. Okay, it was moving down for the last 3 days. It's moving up now. So what's I understand it's a candlestick. Okay, I can see the movement that it's had. I can see the volume that it's had. I can see maybe it's on a different trend line. Maybe it's turned around and the trend line's changed again, because there's some other really interesting things. Like for instance, look at this here. So this price back here, so you can see it was a support price, okay, and then the market moved up. It went down and it moved back up. What tends to happen is support levels become resistance levels, and resistance levels become support levels. So this was a support level, and now it's moved back up and it's using it as a resistance level. That would be another indicator of another move down, to be honest. But that is, and you can use multiple indicators. So you might be using a continuation pattern with support and resistance, with trend lines to assess, plus your bias, so which way you might think that the market's going to go, to assess whether or not you'd place a trade. So look, that's pretty in-depth stuff. And like I said, it can take years to actually work out how to analyze charts properly, but I think that can give you just some basic tools just to go see what's happening with price. You can assess it and understand a little bit more about what you're looking at when you arrive on the charts. Like I said, again, drop a comment in the box below if you've got any questions, and I'll try and answer you down there. Okay, look, that's Luke here again. Thanks for watching, and I'll see you in the next video.